Hey everybody, welcome to another edition of Thursday Thoughts with Ashley Hannah Murphy and Angelo Datseris, President and CEO of Leverage Lending Group, and your go-to for all things mortgages, refinancing, home buying, investment buying. And then myself, I am a local real estate agent here in the Charlotte area. I've been in the business since 2017, and we are going to get started today.
Hey.
Hi.
What's going on? Can you hear me?
I feel like you're like surprised.
Well, I didn't know. I couldn't hear you, so I whipped the camera off of the stand here and made sure my volume wasn't muted. So I think we're good to go, though.
Yay! Awesome.
Right.
How's it going?
Okay. It's going, man. It's going. We're seeing some activity. We're seeing some crazy market shifts. We've got a little bit to talk about with this week, what has come out this week with discussions from the Fed and retail sales have made a shift to the negative for interest rates. Rates have gone up a little bit. So hey, but it's okay. I'll come back down.
As long as they
it's all good.
As long as we just, they could go up a little bit, but like, let's just can you put in that request for me to the Fed to just like.
Got it. Got it. I'll let them know. I'll let them know. All right. Well, what you seeing out there in the market? You seeing a pickup? What you seeing?
Yeah. Let me just say, this past weekend, I worked my tail off. Like, I mean, I must have looked at 15 to 20 properties, 2 different buyer clients. One of them is a cash client. The other is a first-time home buyer. We're on two kind of opposite ends of the spectrum with these clients. So me and the first-time home buyer, we looked at like 9 properties on Friday. We're looking under 300,000, and we found one. We liked it. It's a house that has been on the market for over 60 days. And she wanted to see it again on Monday. So we did that, scheduled the showing. In the showing notes from Friday, I had said that we are like really interested. Let us know if like any movement happens, like if for some reason you start getting multiple offers, which like would be really strange, right? For a house that's been on the market for over 60 days.
You would think, right?
So, we go back to the house on Monday, and then my client she starts to tell me how much she really likes it. And I was like, oh, great. Because just, I want you to love it.
Sure.
And she was like, I was just kind of scared to get excited about it because I didn't want it to, I didn't want something to happen and for it to fall through. And I was like, I mean, it shouldn't. I told the agent we're interested. I haven't heard back from her. I obviously scheduled a second showing today. And yeah. And so we worked out our game plan for our offer strategy. I get in the car. I call the agent. She said we just went under contract.
60 days being on the market, all of a sudden, boom.
That, I'm going to say, has never happened to me, ever. I have never had a client who was interested in something that's been on the market for so long and express interest to the listing agent and them not even call me.
Not even respond to
you. And I mean, like, we were very active with this property. Like I had to change the times that we were going to go see it again on Monday. So she was seeing multiple requests from me for that property. And my client, talk about breaking somebody's heart.
Right.
I mean, I felt like I broke her heart that day.
I bet, man. I bet. It is. Something that's gone.
And now she's kind of shell shocked, but we're gonna get back in the saddle.
Right.
And then I also, with my other buyer clients that their budget's under 500,000. We're looking in Davidson. They want something within walking distance in Davidson. We saw the property on Saturday, or no, we saw the property on Sunday. Spoke to the listing agent. I was like, please let me know if you have any other offers. I'm going to put together an offer and get it to you probably in the next 24 hours, but let me know if there needs to be a rush. And he was like, there's no other offers. I talked to him multiple times. So we submit our offer. It's all of a sudden multiple offers and we lose. We didn't even get a chance to go back. We didn't know that it was multiple offers though. Which I just think is such a huge disservice to do as a listing agent to your client, to the sellers, because you want other agents to know there are multiple offers so that they encourage their buyers to go up.
Right. Yeah.
Like that's how it works. So I there's some activity out there. There's definitely more activity than there was all of last quarter. I mean, like, if you see something, you like it, you just like, the conversation I'm having now is, let's assume that there's going to be multiple offers and let's make a decision right now. Either we're in or we're out.
Right. Yeah.
Because you can't rely on
there's no like 1 foot in and 1 foot out, right? You got to know for sure. You can't, I mean, and we've talked about it before, right? We're going to be back in the same situation that we were in, not the exact same situation, but with COVID, the rates we were kind of like trickling down a little bit. They're better than they were, a month and a half, 2 months ago. And now you got people, coming back out of the woodwork that are looking for properties. So.
Well, and the thing is too, is that with the littlest tick, right? The littlest downward trend in these interest rates for mortgages, it opened the floodgate on an already stressed inventory market.
Yes. I'm going to grab my, I had some notes from a conference I just went to, and there was something about that when the rate drops a certain amount. I think it was like 1%, 5 million more people come back into the housing market. I'm going to grab mine.
Yes. And I was looking at the statistics that just were released by Canopy on, I keep messing with my hair because it looks weird, but.
Me too.
I was going to say something to you, Angelo. The new listings, so the December statistics just came out. New listings for all of year-to-date 2023 at the end of December were 48,741. Okay.
Of new listings.
That was all the new listings for 2023. For 2022, we were at 57,849. So that was we last year saw 15.7% less listings go on the market than 2022.
Wow.
So that's what I mean by like a depressed, like a really kind of a serious housing inventory situation.
Right. Yeah.
So what was that note you wrote?
Okay, so I got a lot of good nuggets that we can share over here, man. I mean, I don't know if I want to spill all of it in this Thursday Thoughts, but maybe we can split it up half and half. Yeah. But it's a lot of good stuff.
Okay.
So I wanted to yes, every 1% drop, and this is a Barry Habib. He's like the master of all economics, guru. Nationally known. He's been on MSNBC. He knows.
Oh wait, I think I know him. Yeah.
MBS Highway is his company where he does market rate updates every morning at 10 o'clock. Anyway, so if you're waiting for rates to come down, it's every 1% drop in rate equals 5 million more borrowers or buyers are going to jump into the market. 5 mil for 1%. So why not just bite the bullet if you can, if it's feasible, if you can afford it, to buy where there's 5 million less buyers in the market, and then either buy, either if you have a temporary buy down from a seller or pay a little bit more money or whatever it may be, just kind of suck it up for a little bit, if you can, right? Within reason, if you can. But that was crazy to me.
Yeah.
I knew that there was some stat there, but I didn't know exactly what it was. Nationwide appreciation is 4.5 to 5%. This 5%, 4.5 to 5% has been nationwide appreciation.
Is that
History and the Case-Shiller history of appreciation? We're at 4.5 to 5% in the history of home appreciation. So of course you have pockets of like 10 and 15% appreciation. When you break up the average from, like, I forget what the date, it was like 1940 or 50 or something like that. It's an average nationwide yearly appreciation is 4.5 to 5%.
Yearly appreciation. So that means nationally.
National.
And
you get your good pockets and bad pockets.
Right.
Right. All of the above, right? And the national level.
It averages
historically
out between 4.5 to 5%. Yep. That is.
It's great.
Yeah.
Yes. Okay. So this is a crazy stat when it comes to, I got all sorts of crazy stats, right? I'm going to ask you a question.
Oh, God.
Let's see here. So we gave a breakdown on the percent of agents that did 1% of the transactions annually. Like, how many agents did at least 1% of the transactions? So yeah, basically one transaction a year. What's the percentage of agents that did those?
It's like 20%, or is it? It's like 80% or something. 80% of
49% of
49%
of agents did one transaction a year. Listen to this: 25% of agents did 4 transactions a year.
And is this for last year?
This was for I would assume it's for last year's data.
So
yeah.
20. You said 25%.
25% of agents did 4 transactions per year. Do 4 transactions per year. And
wow.
It could be a year. It could be a year-over-year thing, but I didn't write that down if it was. But they were just talking about previous stats. So then the other 25% do the rest of them. Do the bulk. You know what I'm saying? All the other ones.
Oh wow. You see that? Did you see that?
Yeah. I don't know. Did somebody give like a like or something? I don't know.
I don't know. I was just making sure that I wasn't like having a stroke. And,
well, thank you, whoever liked that. Yeah.
I mean, yeah.
Yeah. So I got another killer stat for you. I'm going to flip the page over here. This is a Freddie Mac statistic. Okay, so this is like legit, real deal Freddie Mac statistic. Yep. The average age of a loan officer. Ooh. What do you think?
42.
56.
Really?
I was shocked as shit too.
Wow.
Yeah.
That's interesting. And
it is interesting because, you know, all the older agents, they're not on social media. All the agents, all the LOs I know, they're on social because they're younger, right? So
like that's why we don't like think of maybe
them being older.
Yeah, because like that's not who you see on social media.
Right.
That's so interesting.
Average age of a realtor.
I think it's like 55.
54. Yep. 54. Yep. Now this does kind of make sense, but I was still a little shocked from it. Average age of an appraiser.
60.
66.
Because I feel like that's like a bit of a longer time. You have to be in schooling.
In the game, you have to have an apprenticeship.
Yes.
And, you know, because it's tough. It's not like being a loan officer or a real estate agent. You know, you can't just walk in the door and they're approved, right? you gotta
you gotta do more things. I mean, maybe that's the thing. Our industry should look at like what the appraisers are doing.
Yeah, and you know what? I honestly think that in order to do mortgages, I think you should own a home. I think that should be a requirement.
Same thing with being a real estate agent. Like, that seems so strange to me that people are real estate agents that have never bought a house. Like, how are you guiding anyone through anything if like you don't even?
Right, you have never been through it. Right. I mean, you have to be a loan officer. They check your credit, and you can't have like a 520 credit and be an LO. That's a no-no. So that's at least a good thing.
Yeah.
Right. You know how to manage your money, but I think you should own a home.
The only requirement for a real estate agent is like, you can't be a felon. You can't be in prison.
Right.
We'll take anybody, really, just like not the prisoners.
Right. 50% or 56% of all Freddie Mac purchases, basically loans that were sold to Freddie Mac, are millennials.
Wow. That tracks.
The biggest search provider, where do you think people go to search for how to qualify for a mortgage?
Zillow?
YouTube.
YouTube,
Am I just blowing your mind right now or what?
I mean, I feel like I knew, like, YouTube is like, I always forget about
It's everything.
YouTube.
If you can try to figure something out, it's like, how do I replace a light bulb? YouTube.
I really just like need to get on board with YouTube. I just feel like it's very complicated, and I'm like, let me just stick to what I know. But like, everybody goes to YouTube, and like, you don't think about that. It doesn't seem as like sexy as like Instagram or TikTok, but like, that's where the people are going.
Well, I'm going to plug my YouTube right now. Follow me. I got like 384 subscribers or something like that. So, and I put these go on YouTube as well. So if you want to see all of our Thursday thoughts, the Tuesday talks that we used to have, all the videos that we got, they're on my YouTube channel. You can check them out.
I don't know my YouTube channel to tell you, so that's how bad it is.
Today's U.S. housing landscape. Basically, 2.5 million homes need to be built to help. It's not going to fix it, but to help shore up some of the inventory issues that we have. Okay. Now, this is the meat and potatoes I went down there for. I am all into AI, and I got some good stuff. We'll sidebar that. A lot of killer stuff coming down the pipe when it comes to AI. So you got to get ahead of it, or you're going to be left in the dust big time.
Right.
So, the Google creators said that AI is more important than fire and electricity. It's like it has been the most important like technological advancement since fire and electricity.
Wow.
Yeah.
Since fire and electricity.
That's what they are. Mm-hmm. That's crazy shit, right?
Yeah. I mean,
$1 in $4 are invested in AI with all these like research companies, and $1 in $4 spent in technology is spent in AI.
Wow.
Crazy, right? So you want to think about where something's going, and the progression is going to be like we thought, going from dial up to non-dial up and streaming. This is like light years, and the AI is teaching itself to be better. So it's warping at faster than light speed. It's crazy how fast it's evolving. Stuff there from the invested. I got some good nuggets we can go offline for that.
I read on my stories the other day a listing description that was clearly AI generated. it was the saddest thing I've ever seen. And now I can't find it again to post the pictures of what the listing was. The listing was a $255,000 house that it looks like somebody used one of those disposable cameras to take the listing photos.
Mm-hmm.
And the listing description was talking about rolling meadows and peaceful tranquility and all these experiences that you're going to enjoy in this quaint, luxurious escape. And I was like, what am I?
Right. Hey, it looks like Ash also joined. Hey, Ash.
Hi.
Thanks for joining. And here's another kind of I kind of knew this. I didn't know what the actual stat was, but if you have somebody like a lead, like a prospect come in through the website or a text message or whatever, if you wait 5 minutes to contact that person, you are 50% less likely to get in touch with them.
Yeah, I did know that. I honestly thought it was 7 minutes. I thought you had 7 minutes.
Well, not anymore. I mean, with TikTok and Instagram and everything else, I mean, you know, in 2 years, it's probably going to be 2 minutes.
Right.
You know what I'm saying?
Yep. You better be on their live.
You better be on top of it.
Yeah.
For sure. But I got a lot of new stuff. I'm gonna tell you offline about what we got cooking over here. It's Craig. We got some new reno. Freddie Mac has rolled out this new suite of renovation products, making it much easier to do renovation loans conventionally.
Ooh, good.
Yeah. So the moral of the story is, you know, if you don't team up with Angelo, you're just gonna be left behind, right?
That's right. That's right. You better stick with us. We're younger than your average loan officer and real estate
agent and appraiser.
Right. And appraiser. Yeah. So like we're young, we're hip, you know, we got the tools.
On the new tech. Yeah, right. For sure. And all right, so kind of just segue here to rates. You know, everybody's been talking. They've said, oh, we're going to, cut 5 and 6 times this year. We're going to see rate cuts, blah, 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 blah. Well, the Feds just spoke earlier this week and they said, well, maybe we're probably going to slow down on our predictions of cutting rates as fast as we anticipated. And so that sent the markets into a tizzy. And the retail sales data came out showing stronger than expected retail sales, which means there's more money in the market. So why is there more rates? Because there's more money in the market. So,
y'all, save that money for your down payment. Stop spending.
Yeah. So we were on a very nice, slow downtick for a good little bit. And just one little sentiment from the Fed just kind of spun it out of control.
But you know what? If y'all listen to us, Angelo and I both said that, like, because there was this trending social media going around.
It was like, they're gonna drop it 5 times, and we were both like,
yeah.
We don't really know what's gonna happen.
Right, they're gonna do what they're gonna do, and we're just gonna have to like figure it out. Yeah, we told you. So
right.
We're just realistic,
Right.
Still great.
Still great times. I mean, mid to high 6s, low 7s, depending on score, and things like that. That's kind of where we're sitting. That's for conventional. I mean, if we're at FHA and VA, you're going to be at the high 5s, low 6s. So, that's kind of where we're sitting right now. It's better than a month and a half, 2 months ago when we were at 8 and an 1/8 for a conventional.
Right.
So, hey, anything's better than 8 and 1/8, right?
Oh my gosh, I know. I was looking at a loan estimate you gave to one of our clients, and I was looking at a similar one that we did like 60 days ago. And I was just like, it is so much better right now.
Hey, Elizabeth, so she's got a question. What about DSCRs? So DSCRs are, if you guys don't know, it's basically called debt service coverage ratio, where we don't care about your income. It's for investment or business use properties only. Depending on loan to value, down payment, stuff like that, let's just say it's a 20% down payment DSCR loan. If it ratios a 1-to-1 ratio, you're probably looking at, I just closed one in Indiana about 2 weeks ago, and it was 8.375. So pretty good.
Yeah.
Where you're looking at a conventional, if you do a full doc conventional investment, you're looking at 7.6 with about 2.5 or 3 points on that just to get that 7.6. So, and the 8.375 had like a point or point and a half on it. So it just depends. I mean, it's still a great rate for a no income loan, right?
Wow. Yeah. Yeah.
So, does that help? Hopefully that helps, Elizabeth. And feel free to shoot me a DM and connect with me after, and we can have a chat about it.
Yes. Thank you so much for asking these questions.
Yeah,
Love it.
for sure.
Love it.
For sure. Yeah, we try to stay up on the markets and give you guys some nuggets here and there. Feel free to reach out to Ash. Where can they reach you, Ash?
You can find me here on Instagram at Ashley Hannah Murphy. I'm on here a lot. Shoot me a DM.
And your social's been crushing it lately, girlfriend.
Thanks.
Give you props on that.
Thanks. We're trying. We're trying to, you know, we gotta stay hip. We gotta stay with it, you know. Or just email me, text me. I'm around. Angelo, where can the people find you?
CLTMortgageguy, pretty much on every platform. I got the YouTube channel, CLTMortgageguy. Look me up on Angelo. Datseris, semi-famous. You can find me in IMDb at Angelo Datseris too.
It's true. I've seen his work.
You see? But yeah, pretty much everywhere on CLTMortgageguy and Leverage Lending Group. So on Facebook, Instagram. I don't really do much with Twitter, but I'm out there. Elizabeth, yes. Yeah, and you know, Elizabeth, yes, we'll do. Please shoot me up, hit me up. I mean, we specialize in investment, DSCR, Airbnb loans. That's one of our fortes. Anybody can do that easy peasy W-2 income. You know, low hanging fruit stuff. So, but we do it all, but we do the investment stuff. We're killer at that. So holler at me.
100%. I
Awesome.
100% recommend him.
Cool. So 2 weeks.
2 weeks. We will see y'all in 2 weeks for another edition of Thursday Thoughts. I don't know. We're shooting somewhere between 12 and 1. We're trying. Yep. You know, we're trying.
Yep. It's you know, we're bobbing and weaving.
Yeah.
Bobbing and weaving, you know. So anywhere between 12:15 and 1:15 is where we're going to be at. And then we'll try to post like a little story or something the day before, day two before, let you know when. So we appreciate everybody tuning in.
Yes.
Send to Ash. She's your girl. Send Ash a question. Reach out to her. If you got any real estate questions, if you got any finance questions, holler at your boy.
That's right. And we will see y'all next time.
All right. Bye-bye.
Bye.